Here we go. I can say good morning. It's early here in Park City, and it's still morning in the East Coast. Welcome, everybody. It's going to take a few minutes for the waiting room to populate into our Zoom today. Thank you for being here. Just a little Zoom housekeeping. As you know, we can't hear or see you, but you're most welcome, and we encourage you to ask questions in the chat box of the Q&A, depending on how you've connected with us today. And I don't want to exaggerate or over embarrass our guests, but I have two wonderful people. Jerome, I don't know you, so I don't know how wonderful you are, that I've known for quite a long time, Rosemary and Cody. They are just stars and just lovely people, and we've got to know each other quite well. And one of the things about great ideas is if you can't execute on them, it kind of sucks, right? It's no fun. These are execution people. They've done it regularly. They've demonstrated that they can execute in things that I've asked them to do, and I try to do the same. So all that I can fanfare is warranted. So thanks for allowing me to do that. You guys are great. This is a new enterprise for all three of these folks. Not new to them, meaning that they've done this sort of thing before, but they've organized it into a company that they're going to tell you more about. And so I'm really excited to have them here. And like I said, I just think they're fine people. So Jerome, what part of the world are you in?
I'm in the south of France right now.
Oh, so you're actually there. I thought your background.
I am.
Just
yeah.
So we're broadcasting to you live from the south of France, from suburban Washington, D.C., from Connecticut, and Park City, Utah. So I'm going to say hello in the chat box and ask that somebody say hello back to make sure we are broadcasting. Looks like we've got most people on here now. So just for the record, this is being recorded. We're going to post it on the Family Office Insights YouTube channel. You're welcome to play it again, fast forward it, pause it, share it with others. It's a really convenient way to see if, thank you, Renee, Greg, and Carl. Good to see you, Carl. Carl and I saw each other last night, just a full disclosure. The recording is a convenient way to review and share with others, and please do. So with that, I'm going to ask Rosemary to take the helm, and I'm going to pay attention, and please feel free to ask questions as we go along. And thank you, Jerome, Cody, and Rosemary for being here today. Take it away.
Thank you very much, Arthur, for all your kind words. I appreciate it. I'm Rosemary Truman. I'm the founder and CEO of Ignite Social Impact. And I'm joined today with a couple of my co-founders. I'll just give you a little bit of background on myself. I'm also the founder and CEO of the Center for Advancing Innovation, and started my career at Goldman Sachs, and most recently in corporate America ran IBM's innovation strategy practice globally. And in doing so, did growth and transformation for 50 of the top 100 companies in the world. So I'm just gonna pause there and hand it over to Jerome.
Thanks, Rosemary. Well, I'm Jerome Di Giovanni. I'm a scientist by training and recently become an entrepreneur. I mean, a few years back, I've been working with biotech companies and green technology companies in terms of strategic business development and fundraising. And I've lived in France, the United States, and Africa, which gave me this will to try and have impact. So I will let Cody continue.
My pleasure. I appreciate it, Jerome. And many thanks to Arthur. Again, really appreciate the opportunity to speak to the group here. Look forward to engaging with each of you more one-on-one as we move forward. I'm Cody Locke. I'm Chief Innovation Officer and co-founder here at Ignite Social Impact. I am based in the New Haven area, up in Connecticut. My background is in neuroscience. I have a PhD in neuroscience from the University of California, San Francisco. I was out there for about 9 years. I was working with my wife, who was finishing an MD PhD there. at UCSF and is now at Yale. And I spent enough time out there to be bitten by the entrepreneurial bug, to really see also that there are about 170,000 federally funded inventions sitting on the shelves, collecting dust, being wasted every year, with so much opportunity to connect those inventions with entrepreneurs, with people in need around the world. Really inspired to help advance those technologies, impact those ecosystems, and that's what we're doing here at Ignite Social Impact. Again, really appreciate the opportunity. Pass it over to Rosemary to tell you more.
Okay. Thank you, Cody and Jerome. And again, thank you so much, Arthur, for everything, for allowing us to have this presentation today. So I'm really delighted to talk to you about Ignite Social Impact. We launched Ignite Social Impact right when everything shut down in March. Ignite Social Impact is all about it's a crowd equity platform that allows anyone to invest. So what we're doing here is democratizing impact investing. The whole idea is to have issuers on the platform that will be making a social impact, and they're in the deep tech area, or tech for good. So we'll have on the platform will be highly cultivated tech for good deal flow. So I'll start with maybe a definition of what is impact investing. I'm sure everybody on this call knows what it is, but they're made with the intention to generate positive, measurable social and environmental impact alongside a financial return. The market is $715 billion in impact investing. There's about 1,720 organizations. They are in these different categories. You can see there's quite a lot are focused on finance and energy. And then there's a water and agriculture here, and then a small slice of healthcare, some infrastructure, and education. What's really interesting about this graph is that this is not taking into account the untapped potential of the public. So the non-accredited investors are not represented in this picture. So every year, there are 60,000 tech companies that are launched. 37% of those are social impact tech companies. And of course, they need access to capital like any startup does. But only accredited investors provide capital. So they're doing well by doing good. So there's a gap here because the non-accredited investors do not have an opportunity to put money into these companies. So Ignite is a platform, marketplace, a crowd equity platform that will advance tech for good social impact startups. It's registered with the SEC and with FINRA using Reg CF, and anyone can invest $100 or more. And pretty soon you'll be able to invest up to $5 million. On the right-hand side, you can see this is our website for Ignite Social Impact. And I encourage you all to go there. You can Google it right now, or go to ignitesocialimpact.com. And by the end of this presentation, I hope that you've all signed up to be an investor on the platform. So with that, I thought I would start with the end in mind. Arthur always advises people to put their ask up front. So what we would like to ask you all to do today is participate on the Ignite platform to gain access to highly cultivated tech for good deals. You also may have some of your portfolio companies that you'd like us to evaluate to see if they would like to participate on the platform to raise up to $5 million. And then you could also consider investing in Ignite. We are going into a couple of significant milestones. The next significant milestone is actually achieving the final FINRA approval. We've gone through 2 rounds with FINRA and questions, and we'll be likely, knock on wood, through FINRA by the end of October or early November. So if you have some companies you want us to consider, we're going through our deal flow right now. We have some really good companies that can be issued on the platform. Just a little bit more background about myself here. One thing that I mentioned and Cody referred to, and I mentioned at the beginning that I'm the founder and CEO of the Center for Advancing Innovation. In that role, I launched it many years ago, and what we do is we basically make use of the inventions sitting on the shelf. And the idea about Ignite came about because of the fact that the companies we launch require capital. So over the backdrop is every year in the United States, we spend about 150 to 170 billion dollars in taxpayer dollars, and out of that we produce inventions. So this 150 to 160 billion dollars is spent by universities, hospitals, and federal laboratories to develop inventions. So what we have done is we've done partnership agreements with 123 institutions across the United States to gain access to 170,000 inventions. And what we do is we systematically commercialize these inventions. So we've launched 335 companies over the last 5 years by taking the inventions that are commercially viable and they're tech for good inventions. They're aligned with the United Nations Sustainability Development Goals, the SDGs. We match these inventions with talent, and then create startups, and then match the startups with capital. So it's a trifecta: the invention, the talent, the entrepreneur, and then the capital. So I mentioned this because it's extremely important deal flow for the Ignite platform, and it's built-in deal flow. We literally have done the due diligence across all those 170,000 inventions. And earlier, Jerome and Cody introduced themselves. I don't know if you want to add anything else.
I appreciate the opportunity, Rosemary. Absolutely. Yeah, I would point out that, you know, we here are committed to social impact. That's really what we're doing. We're not here to we're not here to simply generate profit. Now, as Rosemary mentioned, Ignite Social Impact is founded on opportunities that some of which are created by the Center for Advancing Innovation. We launch companies through the nonprofit Center for Advancing Innovation. And we found that even though the success rate is quite high, now over 50% in terms of the 300 plus startups that we've launched since 2015, there are opportunities to connect social impact focused CAI spin-outs with capital. And we want the public to have the opportunity to join us in advancing those technologies by investing in the companies. It's not simply charity, it's an impact investment, which they can have some skin in the game, helping to get these companies where they need to be, making impact. And now I would point out that, you know, again, through the Center for Advancing Innovation, we have numerous connections, government, academia, industry, investor communities, Arthur and other investor communities as well. We bring those folks together. That's really what it's all about, bringing folks together, the right people, building those relationships. That's something that we'll continue to do with Ignite Social Impact. But again, with the focus being on real impact, really looking at addressing the United Nations Sustainable Development Goals, not simply advancing tech, but making impact. And this is really the next evolution of what Rosemary started at the Center for Advancing Innovation, and something that I'm proud to be a part of. Appreciate the opportunity to do it.
Can I ask a question? I don't know if you're going to get to this, guys. So there are dozens and dozens of crowdfunding platforms. Let's just call it that for a minute. And it's clear that aside from your good connections and thoughtful desire to do impact investing, those are differentiators, is the way you list a company and all that kind of stuff about the same as every other crowdfunding platform? Or can you talk a little bit about how one would go about, not maybe first about listing a company and second about being an investor, how that is compared to others?
Yeah, so in terms of the actual mechanics of listing the company and being an investor on the platform, it's very similar to any other platform. There is one area that we will be, hopefully we'll be able to exploit, because the SEC is changing the regulatory dynamics. So I'll be talking about that in a moment. That's called testing the waters. So that's definitely going to be different once that SEC regulation changes. And then that will definitely change the dynamics around which participation would occur on the platform. So I'll get into that. Thank you, Arthur, for the question. So I just want to give you a little bit of an overview of where we are, because we have made significant progress. We actually raised the money for Ignite Social Impact when everything shut down. It was so interesting because I can remember it took me an entire week to set up a bank account because all the banks were closed. So I have an online bank, which I absolutely love. So we did our fundraising in March, closed it in March as well. In April, we got through the SEC. In May, April and May, we were getting the website up, got the back end, finished the back end in July. We got SEC approval in June. We're getting FINRA approval right now, and we're very close to getting that approval. And we've gotten responses in September. So we've made a significant amount of progress in a very short period of time. Once the FINRA approval goes through, we are open. We're going to have issuers on the site, and we need a lot of investors on the site. So again, we invite you to join us. So the differentiators, getting back to what Arthur was talking about, and I'm going to get into the details about the Test of Waters item. We are going to be the first impact investing crowd platform, featuring the United Nations Sustainability Development Goals, and also making an equal playing field for women and minorities. So it's highly curated deal flow. Number two, we really democratize impact investing, allowing anyone to invest because we're using Title III regulation. Not everyone uses Title III. This allows accredited, non-accredited investors both to invest $100 or more. Given the changes that the SEC is making, the investors will be able to invest up to $5 million. Right now, the cap is 1.07 million. It's going to go up to $5 million. And again, it'll allow accredited and non-accredited investing. So it really is democratizing impact investing. Also, we have developed a real strong community. I mean, I think between me and Cody, we have about 50,000 LinkedIn connections alone. And that's just the beginning of it. You know, it takes a small village to do what we do to create these startups. And the way we create the startups in the Center for Advancing Innovation is we launch a global challenge. And we've touched literally millions of people through our challenges. We had people participate throughout the entire world to create that 335 startups. So we will continue to leverage the mentors and the accelerators that are part of our network. And that really creates a high probability of success, which we have seen. Over the last 5 years, those 335 companies were launched, and we have a 51% success rate. We do actually take extreme care to monitor those startups because we are dealing with a lot of federal agencies and a lot of universities and hospitals that require us to track them because we're in their annual reports. So then going into so just drilling into these three items. First, our selection process. So personally, I have about 25 trade secret models in due diligence. I've done due diligence for more than 28 years, starting at Goldman. And I could talk to you about the sausage making in the due diligence process, but this is a very, very high level view of how we do the due diligence. First, of course, we want to make sure there's a social impact. And we look at that through the lens of the World Bank. And there are 17 sustainable development goals. So every single company has to be aligned with one of those or more of those. Two, we like to have capable, shapeable teams. Really openness is a critical factor for any startup. I led an engagement with the Kauffman Foundation on why do startups fail. And we found that the number one reason for failure for startups is capabilities. So we developed a model of 27 capabilities that must be required in order to see strong startups. And then in addition to that, other studies have found that openness is a critical factor. So we actually do testing on our startups to make sure their openness level is very high. And actually troublemaker score is actually kind of high too. We want to understand if they're narcissists as well. So there's a whole bunch of different scores that our startups get to see if we can evaluate them from an objective standpoint. Have they raised non-dilutive funding? So we want to see that as well. And then high growth tech potential. So high growth could be gazelle-like companies. Gazelle-like companies are ones that triple in size in 3 years. So they're very fast growing. But it could be, the tech, by the way, could be life sciences as well. So they could be high growth, but it could be take a much longer period of time. We are going to be taking a portfolio approach to the companies that will be listed on the platform. So they won't be like all life sciences or all gazelle high tech companies. There'll be a strong mixture so that you can see returns at different levels. And then we also look for operational feasibility. We look at the risk factors associated with the startup. So that's one, is our due diligence process is bar none, rock solid. I mentioned before that I led growth strategy and transformation for 50 of the top 100 companies in the world. And I received several awards for the growth strategy is basically my strength. And it's the foundation by which we select the inventions for the challenges we run at the Center for Advanced Innovation. So the second differentiator I mentioned was, and this is pending SEC rules. So right now, the current state with the SEC and Title III is that teams or startups can raise up to 1.07 million. At present, there's no ability to test the waters. Test the waters is when you can get feedback about a startup prior to listing them on the exchange. That's not allowed right now. So for example, we have a whole bunch of companies that we're looking at to put on the exchange, on the platform, but we couldn't tell you what they are because they don't allow you to test the waters. The SEC mandates that you can't actually tell anyone what companies you're thinking about putting on the platform. The issue with the way startups raise money right now with the SEC is that if you're raising $1 million and you have 1,000 people that give you money for that $1 million, you're gonna have 1,000 entries on your cap table. So you have a highly fragmented cap table, and that deters future investments from other investors because they don't like fragmented cap tables, especially in the deep tech area, in life sciences in particular, because in life sciences there's usually a need to raise, upwards to $500 million. There's also yearly limits for the accredited investors, only $107,000 per year for all investments cumulatively, and also there's safes. And safes are when you pay for equity, but you don't actually receive the equity until a milestone occurs, and you may never see the equity. So safes are very bad for business. In the beginning, we're estimating in the beginning of November, given the SEC announcements, there'll be a $5 million limit in the future. There will be allowed to be testing the waters. In order to address the fragmented cap table issue, there'll be SPVs, special purpose vehicles in the back end. So it'll take all those 1,000 lines that I mentioned to you and put them into one line. So it'll be only one line represented in the cap table due to this special purpose vehicle. And there won't be any yearly limit for accredited investors anymore, and there'll be no more safes. So the future state is we're almost upon it, and it's going to be better for everyone who wants to put money into startups. Number 3, our partners. So Ignite Social Impact and the Center for Advancing Innovation. I'm the founder and CEO of both of the companies. And as I mentioned, the Center for Advancing Innovation, we've launched 335 companies over the last 5 years, and our companies are quite amazing. We have a couple of unicorns in the mix, and we have one drone company, for example, that's the highest flying drone that exists right now for Earth surveillance. So we have some great companies that could be good deal flow for Ignite. But again, we're very open to all kinds of deal flow. So we'd love to see your portfolio companies. If you have some that you think would be a good fit, they're in the deep tech area, tech for good, social impact. So that's one partnership that's very strong. Impact assets. Impact assets is only one example of a series of other impact asset investment companies. So these companies, they actually deploy funds for donors. So the donors give them money and they deploy the funds, they get equity, and when they get returns, it goes back to the donors. They have a significant number of donors, high net worth individuals as well as family offices. And like I said, there's more than just one of them. There's several that we're going to be partnering with. Resonance is a philanthropic organization that actually invested in Ignite, and they are connected with the Silicon Valley Community Foundation. And Sherry Sobrato is the name of the lady who is has the multi-billion-dollar fund. The Sobrato family is considered the mother of Silicon Valley, so quite prominent and quite well connected. And then we're partnering with a series of organizations that can help our startups. And this is really important for life sciences startups in particular. In Arkansas, this health tech group has put together kind of a consortium of hospitals where new inventions or startups can leverage their technology to test it in a clinical setting. That's one of the most important things when you have a life sciences company. And so that network is going to be fantastic. They're the only ones in the United States that we've seen be able to galvanize an ecosystem and able to leverage their clinical expertise in a setting where it can be applied. And Open Grants is an organization that they're wizards at grants. There's so much free money out there, and we want our companies to have as much non-dilutive funding as possible. So they have access to not just the federal funding, which of course there's many billions of dollars. I mean, if the CARES Act alone has 1.5 billion in it, but they have access to private foundations and family offices as well that are and putting non-dilutive funding out. So they're going to be a tremendous asset to our startups to get that non-dilutive funding that I mentioned. So I'm just going to put our ask up again because I'm just winding up the presentation and I want to take some questions. So we'd love you to all participate on the Ignite platform. As soon as you go to ignitesocialimpact.com, on the upper right-hand corner, you want to invest. So you just click there and you can put your information in and gain access to the tech for good deals. Put any portfolio, any portfolio company that you have that wants to raise up to $5 million, let us know, and we'd love to perform due diligence in the company and see if it would be a good fit. And then we're not accepting any investments right now, but we're going to be hitting some significant milestones. So if you're interested in investing, please let us know, and we can let you know when we actually are going to start accepting investments. So we'd love you to be part of our community. And I'm just going to pause there to see if there are any questions.
Thanks, Rosemary. There's a few, yes. Our dear friend Alfie, you may not want to release this secret sauce in this way, but he's asking if the 27 capabilities, if there's a white paper that you wrote on that. And I'm not answering for you, but I'm not sure that you want to take the covers off of that one, right?
Yeah, that one's actually proprietary.
Yeah. So
Yeah, that's
nice try, Alfie.
No, I would say that's pretty deep. It's pretty deep into the onion, but
yeah,
there are multiple variables at which we'll look, right? Financial returns, the potential for that, of course, critical, but also we are looking at social impact metrics. There's a lot of sort of social impact washing out there, not to be overly negative, but you often will find a startup that is labeled as social impact, but in fact is, according to the established metrics from the impact investing community, actually not social impact. So we're also screening the potential issuers for their potential to deliver positive social impact to the world. And if they don't do it, for example, if it's luxury, happy to see them excel, but they won't do it on the Ignite Social Impact platform.
Yeah, so social impact can be negative or positive, or you can make an argument that anything's social impact, but the greenwashing, as you suggest, is pretty rough. Mike has actually asked that question while you were chatting. So what constitutes a social impact company? So
Arthur, this is something I was going to come back to
yeah,
when
please.
you asked your first question, because you asked exactly what differentiates Ignite from other platforms. So there are about 40 or 50 different funding portals. There's one that comes to mind very often. Very often people talk about Republic and they say, oh, Republic does social impact investing. You can explore the jail room and you can see that some companies are labeled social impact. As Cody was explaining, they don't have due diligence for this. It's just a gut feeling. So they say those people are doing health, so probably it has a social impact. Let's label them as social impact. But the thing is that when discussing with many impact investors across the globe, there was a real problem in synchronizing everybody's mind around what impact is. And there are metrics that are being put out very frequently. A few days ago, the big four accounting firms released a white paper about how to quantify ESG criteria. So a lot of people don't differentiate between ESG investing and impact investing. So that's something we are going to be really strict about. We're developing a model which on the business side is based on what Rosemary has been doing for about 30 years. And we have a new proprietary model that we're developing in order to assess impact itself globally, both environmental and social impact. We'll also include an ESG filter in the model, but that's basically how we're going to give two different scores that are going to be combined into a global score. And that's how we're going to screen the different issuers to allow them on the platform.
Yeah, very cool. So look, we've been all exposed to a variety of conferences or speeches and all that business. And in the spirit of shameless self-promotion, I will take a minute and do that. As Rosemary and Cody know, in September 5th, along with a couple of friends, we did Family Office Insights had a conference at the UN all about impact investing. And it was my frustration that drove that, because people were talking about the problems and not doing anything about it. So we threw 15 companies who had actually had impact and could demonstrate that they had impact, and they also happened to be making money. And we had 210 family offices in the room, 250 people. So I totally appreciate the narrowing the fire hose, and you guys make your own definition of what impact and what fits in it doesn't have to be anybody else's. And the guide using the Sustainable Development Goals is super valuable, because it gives everybody some sort of anchor to look at things, right? So I think that even though and I can say this because I just don't care, but the UN has, has a great brand and does some wonderful things, but can't execute on much of it. So it's up to us to execute on it. So using their branding and their goals is super valuable, I think. So that's my shameless self-promotion editorial. And so thanks for letting me do that.
Okay, great. And we've aligned our challenges with the UN, the SDGs. So each of our challenges is aligned with one or more of these boxes. So
Yeah.
by nature, our startups are as well.
Yeah, totally makes sense. So Renee has a question. May I pose it?
Yes, please.
We are working on COVID therapies. Oh, wait a minute. Maybe it's not a question. Do we qualify? Okay. Yeah. So they're asking if they qualify for their social impact, and we can look at that, after the call for sure. Right. Well, you'll get the narrative from the chat. Thanks, Renee. I'm not trying to sidestep you, but there's no way for them to answer this without looking under the hood, right?
Yeah, we would want to look under the hood and run the company through our algorithm.
Yeah.
Look at the
But
metrics.
having a quick look at having a quick look at the question, I mean, it's quite interesting. The healthcare space is really representative of what I was mentioning earlier. So you might think that initially, because it's health, it is going to be social impact, but it all depends on the dimensions of the project. So here we mentioned the IFC operating principles for impact, and they're based on 3 dimensions of the impact management project, which is what, who is going to experience this, and how deep the effect is going to be. And so if you develop a healthcare related project, that is obviously a social impact, but your goal is to maximize profitability, and you're going to make it extremely expensive so that people, poor people in the United States and definitely people in developing countries are never going to get access to it, then most likely when you run it through an impact scoring system, it won't be social impact at all. It might even be negative social impact. So it's not automatic that just because you think, well, it's health, so it's going to be impact. It's not. It might not be the case, really. Mm-hmm. So it's a very interesting example, I think.
Yeah. Can we talk a little bit about, because I've recently seen a lot of companies, especially in the healthcare space, or probably not the right way to define it, but getting a lot of non-dilutive funding. And so, which is a wonderful thing for not only the company, but investors, because they don't get diluted, right? So how is that? Is there a trend of availability for non-dilutive funding? How are you going to go about it? You don't have to reveal any secret sauce, but can we talk a little bit about that?
Yeah, so there are lots of databases with non-dilutive funding, and of course, there's a lot that are labeled for COVID, which is, means that you get the non-dilutive funding, but you get it a lot faster. But we look at, so the open grants partnership is really important because they have lots of databases that they combine into one that gives you access to information about the foundations, the private foundations, and also the government grants. But we also have non-dilutive funding from accelerators and incubators at times, and also from competitions. So what we do, for example, is with our startups in our challenges, we're in our 9th challenge, by the way, we force the startups that are participating in our challenge to go into startup competitions, because once they have a pitch deck, they can go into lots of startup competitions. And so about 50% of the time, our startups win in those competitions. So it's just free money. So they get it through the competitions, they get it through grants, they get it through, well, those are the 2 major vehicles. Grants either be through private foundations or through family offices or through government.
So that's super helpful. Jerome, you mentioned Republic. We know them well. They've done an amazing job. People think well of them. We know how they make money. How are you going to make money on the platform?
Okay, so I have a slide for that. I'll just go to that. So you can see these are some of the ways, for example, Republic has a 6% success fee. We'll have a 7 to 6% success fee. They also have they use safes. They have a 2% safe fee. We will not be using safes. And then we'll have 3.5% payment, just like they do from an investor. We'll have $2,000 service fee for the startup.
Isn't the Start Engine one the guy on Shark Tank promotes all the time on CNBC? Is that the one?
Yeah, Kevin O'Leary.
Kevin O'Leary, yeah.
Yeah, they've sort of gone all in on Kevin. If you go to their website, it's Kevin, and it's wonderful. Kevin is an investor in at least one of the startups that we've helped through the Center for Advancing Innovation. Not really a social impact startup. No. But we've had some engagement with them, and wonderful, and happy to see them do it. But we're not looking for paid celebrity endorsements. We're open to pro bono celebrity endorsements. However, if Arthur or anyone else out there wants to
You were trying to
Wants to
slide
do a
that one
commercial
by,
for us,
huh?
we'll do it. Yeah, absolutely.
Yeah, notorious might be a better word, but thank you for that, Cody. You're very kind. So what's the scale, you know, using your own words, and what, are you going to be a unicorn in 3 years? You know, how do you want to scale this?
Yeah, so this is what it looks like right now. If we did 2 campaigns, for example, in 2020, which is reasonable, might be a little bit less since we were expecting to get approval a little bit sooner. 12 campaigns, 40 campaigns, and this is very reasonable based on what others have done from a benchmarking standpoint. This is a little bit conservative, actually. So you can see that the revenues go up. These are in thousands, so they go up pretty quickly. So you're at 2 million, and then you double revenues again, and then you get to 7 million in 2024. So that's what we're looking at for in terms of the scaling.
Are you going to offer, because people have struggled with this, including notable people like Howie Buffett wrote a book about how to put a metric on impact and that sort of thing, as well as others. Are you going to put a score? Are you going to establish metrics for a score on impact?
Yeah.
Yes.
Yes. Honestly, what we want to be is the thought leader in the space for social democratizing impact investing, and you know, coming up with something that is measurable and not subjective, objective.
So part of the vision, and of course, part of the vision will require some buy-in from the community, but you know, ultimately we want to be able to say that issuers on Ignite Social Impact are, you know, validated as real social impact startups by having been on Ignite. If you're on Ignite, you're doing social impact. Otherwise, you wouldn't be on Ignite.
It's binary, right? So
Yeah.
I think that's clever. Of course, there's social impact on Ignite.
Right.
So I'm sticking with you. Jerome, do you know, we're not far from where you are, the place called The Camp?
Yes, absolutely.
It's
I've
just,
been there.
are you guys familiar with that?
Yeah.
It's just I've been there, and it is just amazing. It's a entrepreneur facility where you can go and take classes, and it's just spectacular architecture. It's in a very arid part of France. It's just stunningly beautiful. The guy that built it and funded it, I'm going to get some of this wrong, Jerome, you probably know better, but it's relevant to your pitch here today, is he made a bunch of money in whether it was telecom or travel, or like Priceline of France or something like that. And the day it was opening, he drove his motorcycle and crashed and died.
Oh.
It's a sad story, but and you probably know the story better than I do, Jerome, and I'm probably getting part of this wrong, but that's what I heard. And then his colleagues and peers took it from there, and it's just a fascinating, stunningly beautiful, built in a sustainable way. The swimming pool is actually a wooden swimming pool and has no chemicals. It just naturally cleans or something like that. And they've got, you know, it is really isn't it just beautiful, Jerome?
It is, and the swimming pool actually it's an interesting example because it's being made by one of the startups that are housed at the camp.
Yeah.
So I was involved with a startup that was over there at the camp. It's a very vibrant and entrepreneurship community over there, and they're trying to use those startups to implement their solutions in situ. It's almost like a laboratory.
It is.
It's really cool.
If you, since you're there, you're probably, but I think there's collaboration there. We know the people that took it over, not well, but because we spent some time there. So I'm happy to make that connection if need be, but you probably know them all, Jerome.
Yeah.
So we have a question from Renee. Can a company be both purely for profit and social impact company at the same time? The differences will be in the verticals for each category. Right.
Oh, so that is really important. I'd like to answer that one.
Sure.
It's really important because when you talk to mainstream investors, very often they say, I don't want to get into impact investing because there is not enough financial return in it. And actually, if you look at the report from the GIN, the Global Impact Investment Network, it's self-reporting from investors in their community. And it turns out that most of them, they are actually doing just as well as mainstream investors by doing impact investing. So the truth is that impact investing is not just about, it's not about decreasing profits to increase impact. It's about doing both at the same time. So we always talk about double bottom line or even triple bottom line for people, profit, planet, right? So it's not, to come back to René's question, you can totally be a for-profit company and a very successful one and be doing impact at the same time. And that's what we are looking for sure, because we don't want our investors to invest in companies that just do good but don't make money. Otherwise, it's called charity.
Yeah. So you mentioned 2 reports during this call that I recall. Can you just send them to me, or the links, and I can send them? So not only am I interested in reading them, I want to make sure that I haven't read them already, but I'd love to share them with the group as well. We're going to connect everybody, of course, but those 2 are rather interesting. The one that you mentioned before and that one.
The Big Four.
Say it again.
One was called from the Big Four that they came out with the
that one. Yep.
GIN, the GIIN, the Global Impact Investment Network.
Yeah, that would be awesome.
It's a good report, really good.
So I think we're ready to wrap it up. If you guys are, you want to offer some closing remarks, each of you?
Yeah, I'd just like to say thank you very much, Arthur, again, for the opportunity to present today, number one. Number two, I'd encourage everybody to, if you have some startups in your portfolio you think could be a good fit for our platform, please send them our way. And 3, we'd love to have your participation on the platform. And I guess I would thank everybody for their time and their participation and the questions. And Cody and Jerome, if you'd like to add anything, please.
Yeah, of course. Arthur, I did attend the event back in September. Looking forward to the next event when we can do it at the UN. And admittedly, took a lot of inspiration from what I learned there. Really appreciate you organizing that conference, bringing those folks together. That's what we're looking to do here as well, building off of what you've done. I know there are some impact investors here on the call, others in the community that will likely hear the recording. I just want to say, we're open. We want to hear from you. If you're interested in participating in the platform, come on. We want to have you. We're open to feedback. We want to connect. I'm happy to make some friends as well where there's an opportunity to do so. Connect with me on LinkedIn. Arthur can give you my number. Happy to connect anytime.
You're very, very kind.
So thanks so much, Arthur. Really appreciate it. And thanks to those of you who are listening. Appreciate your interest.
Yeah. And thanks everybody for being on the call. And Jerome, did you want to say something?
Well, yes, I just wanted to thank you for giving us this opportunity. Thank everybody who came on the call. There isn't much to add after what Cody and Rosemary said, but yeah, definitely feel free to connect. Also always happy to discuss about impact investing or tech or whatever. Just feel free to connect, and always happy to tell more about the upcoming funding portal. And thank you again.
You're very welcome. Thank you all for being here. We had some nice comments closing out on the chat box here. So thank you all for sharing with us. You're the only thing you don't have more of, and that's your time. All the Family Office Insights community has been awesome through this. Everybody calls it a challenging time. It definitely is interesting, that's for sure. And thank you guys for being here, and look forward to supporting you along the way. anything I
Thank
can
you,
do.
Arthur. And safe
Thank you.
travel.
Okay.
Bye-bye.
Cheers.
Bye-bye.
Bye.